Welcome back. You're still tuned into Power Breakfast on CNBC TV18. It's time to welcome our research team joining with what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormas, let me come across to you first up. A busy weekend and looks like it could be a busy day as well.
Busy day indeed. And when it comes to the markets, to be very honest, we are sitting on the fence right now because there are multiple factors that support a further correction, but there are multiple factors that may lend support as well. Now, to talk about a further correction, well, US market sold off sharply on Friday. The escalation in tensions between Iran and Israel over the weekend. The 10-year treasury yields now at 4.5%, and gold price is also surging on haven demand. So plenty of factors that support a further correction. And Friday, the Indian markets themselves sold off very sharply, and the Nifty gave up all the gains for the week, as did the Nifty Bank. Both the indices ended absolutely flat for the week. But what may lend support though is that Iran and Israel both have spoken about no further escalation, with US deciding to not participate in the conflict. The crude oil prices have not seen an extreme reaction to this. Both Brent and NYMEX are flat this morning. The macro factors may also support because the CPI inflation fell to a 10-month low on Friday. IIP was at a 4-month high. And of course, TCS's results may also lend some support on the downside. Institutional numbers will also have to be watched out for because FIIs were heavy sellers in the market on Friday, over 8,000 crores worth of selling. What we need to watch out for today, of course, crude oil sensitives, metal stocks, of course, because of the sanctions on the Russian LME, gold financiers, and of course the IMD presser later today on the monsoon outlook. The GIFT Nifty as of now though is indicating a gap down start on the market, but hopefully it may get bought into at lower levels. Back to you.
Okay, yes, so it has recovered from the lows as well, so we'll have to see which way things go. Thank you, Hormas, for that. But let's not forget a lot of stocks that will be on our radar. Vamakshi has that list. Good morning, Vamakshi.
Well, good morning, Sona. Let me first start off with TCS. The company reported its fourth quarterly numbers. Revenue growth in constant currency terms was slightly below estimates, but the margins were much better, and as a result, the net profit was higher than CNBC TV18's poll. The total contract value also was at a record, in fact, standing at $13.2 billion. Anand Rathi's revenue grew by almost 29%. Net profit was up 33%, and the company has announced a buyback. They will be buying back shares worth almost 165 crores. Senco Gold has reported 28% revenue growth for FY24, 39% in the fourth quarter, and same-store sales growth for the year stood at 19%. Kolte Patil reported the highest ever annual sales of almost 2,822 crores. This is an uptick of almost 26% on a year-on-year basis. Patanjali's edible oil segment revenue was up in single digits sequentially. Volumes was up in mid-single digits, and the revenue of the food and FMCG business remained resilient. ISMT has received 2 contracts worth almost 344 crores from ONGC. Aster DM Healthcare has declared a special dividend of 118 rupees per share. Ami Organics will be raising up to 500 crores via QIP. And lastly, Granules India will be in focus because Unit 5 facility in Visakhapatnam was inspected by the US FDA and issued 0 observations.
Okay, all right. So those are some stocks that will be on our radar. Thank you, Vamakshi, for that. Finally, Mangnam is joining in with all the cues from the F&O space. Hey, Mangnam, morning.
Good morning. So before all the Middle East crisis, even on Friday, the market faced some resistance at highs, and we saw some decline for all the frontline indices and the mid-cap index on Friday itself. The Nifty Bank, however, was a mild outperformer. The Nifty is facing congestion a little above that 22,700 mark, something that we've seen over the last 3-4 trading sessions itself. So between 22,700 and a record high, there could be some supplies coming in. But that's not for today. Today, the question is, where does the market get bought into? Because the GIFT Nifty is suggesting a big downtick of almost 130 points. What is weighing down on the markets are US macros and Middle East tensions. But what may act as a counterbalancing support is the IT space, because TCS margins were above expectations, and we have a big amount of important results this week itself. Cash market flows, the FIs are selling about 8,000 crores in cash, and not just that, they also sold about 2,000 crores in index futures. But most of that selling was directed towards Nifty, telling you that the Nifty Bank may continue to outperform the way it has. The FI long exposure is still 56%. The net longs are at around that 30,000 contracts. So that is something we'll have to monitor even as the market wades through this volatility. On the way up, 22,650 to 22,700 seems like a bit of a resistance, and that's where the 22,600 call writers are active. But at the same time, there is support around 22,200 at the lower level. And the key to track today's trading session would be the 20-day moving average. That would be the first test of any strength in the market. 22,270 is where the 20-day moving average of the Nifty is. Just watch out for TCS. The other thing that I'm watching out for, whether it sustains much beyond that 4,100 rupees mark on the share. That's largely because the 4,000 call has maximum open interest with a premium of 95 rupees.
Okay, all right. Thanks, Magdam, for all those cues. So that's our power prep segment.